Ladies and gentlemen, welcome back to the channel. AMC Stock is doing yet again the impossible for some of the bears to understand. AMC Stock is in the green today, especially on a day where a lot of stocks are in deep red territory. For an example, Apple is down about 2.5%. AMC Stock is up 2.5%. Whoa, what the hell is going on here? It's not shorts covering. It's not what you might think. Let's go ahead and get into it. We're going to look at the Ortex data. We're going to talk about everything going on as far as the broader markets and really what you need to know with this situation. So let's get into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. But first, before we do, what are we drinking on? We're drinking on some coffee out of our pink mug. Yeah, don't judge us. We need the coffee. But so first things first, what's happening with the broader markets? Let's start there. So the broader markets have been weak. This is obviously true. Now, we've talked about this for literally years now. When the markets are weak and there's times of uncertainty, when there's a lot of volatility in AMC, when the cost to borrow fees are high, in which they're really, really high right now, it creates an interesting dynamic where hedge funds are losing in their long positions in their portfolios. They're also seeing AMC becoming a more risky asset, so they have to put up more collateral. They have to cover, they have to hedge, they have to do something with that position, especially if it's a large position relative to their portfolio. And this is a question, this is a kind of situation that happens hedge fund by hedge fund, but I'm just giving you the broader picture. That's what's currently going on. Now, there's a couple interesting things happening with AMC specifically that I want to talk about. But if you look at the bond market here today, bonds are getting absolutely destroyed. Now, a lot of hedge funds, institutions, money managers, or just wealthy individuals that might be in this trade with AMC, might be short with AMC, well, they also have bonds a lot of the time. Even banks that are in this trade have bonds. Now, when the bonds are getting destroyed the way they are, and when yields are rising the way they are, it creates a more attractive opportunity to invest in bonds. But if you're already invested in bonds, which again, these institutions, these financial players that I just mentioned, they're already in bonds. Now that is squeezing liquidity at the same time. So you have stocks doing poorly, you have bonds doing poorly. That's a problem because normally that should not happen, right? You guys have heard of this. If you've only invested in AMC, you've still heard of this. The 60-40 portfolio, 60% stocks, 40% bonds. That's what a lot of hedge funds, institutions, again, money managers, wealthy individuals target because bonds are seen as more so safety and stocks are seen as a little risky. So what happens is imagine you go into a recession. What happens? Well, stocks probably do poorly and bonds probably do well because investors want that safety. Well, what has happened within the last year and a half now, ever since the start of 2022, bonds have done poorly, and you could see the bond prices, right? When yields go higher, bond prices fall. So that should not happen. If stocks were falling and there was uncertainty around the economy, things of that nature, people should buy the bonds and yields would drop, right? That has not happened. So last year was actually the worst year for the 60-40 portfolio that you have ever seen. That means if you own 60% stocks, 40% bonds, everything did poorly. And that just does not happen. So when you see that happening like we have recently, where bonds, let's go ahead and pull this up and actually chart this out. Bonds have fallen about 9% in price if you're looking at TLT just since late July. I mean, we're August 17th, so just 2 or 3 weeks here, bonds have fallen about 9%. The S&P has fallen about 4.5%, 5%. That's a problem. That's draining liquidity as well. The bond market is 5 to 10 times larger than the stock market, just given, based on what's going on around the world or, recession or not. Right now, I would say the bond market's probably about 5 times larger than the stock market just because what we've seen happen. A lot of people are in stocks or just in cash. So that is a problem that's also having a role to play in AMC, or at least making it so you have to put up some collateral a little bit quicker, right? Because if your assets are doing well as a hedge fund or institution and you have AMC starting to go against you, then just let it ride out is okay because you have a lot of collateral. But when everything's getting destroyed and you start losing on your AMC position, that's a problem. Now, a lot of hedge funds and institutions are losing on their AMC short positions. They've been losing. These cost to borrow fees have made it literally impossible to make a profit. With cost to borrow fees where they are, within a month to 2 months, everyone has lost money. And you can actually lose more than what you could make in the trade. For an example, if you're paying out 2.5% cost to borrow fees or 3% cost to borrow fees every single day, and this trade goes for a month or two, you can start to go negative over 100%. So even if the stock AMC went to zero, hedge funds and institutions would still lose money, but yet they still don't want to cover. This is really showing me that this trade is far more than just shorting AMC. This is really about killing the business itself. And people obviously have a vendetta against AMC. Maybe they got dumped at a theater or something one time. But the stock recently has done okay. I know some people are going to say, what the hell are you talking about? Hear me out. The stock fell 35%. You've been recovering every day since. And shorts have done nothing but short the stock. And I'm going to back all of this up with the data. So keep in mind, I'm not just rambling off of, what I think. This is all backed up by the data. The stock's done okay. Hedge funds have been buying the dip in shorts. They've been shorting the stock ever since the stock fell 35%. And they're in such a losing situation. Yeah, it's actually kind of crazy. Now, I think some of this hedging or some of this upside you've seen recently could be some hedging, but it's not shorts covering. And we're really not seeing signs of a lot of hedging. A lot of this could just be buying the dip from retail investors because after that 35% drop, it's one of those situations where how much worse is it going to get? AMC was just profitable last quarter. They're likely to be profitable this quarter. AMC has about $600 million of total liquidity, including cash and undrawn credit lines. That means AMC does not need to raise capital right away. Odds are AMC does not raise capital right away. And I think at the height of this sell-off that we've seen back when AMC dropped 35% on August 14th, this 35% drop was pricing in more than just this conversion. It was pricing in dilution. And I think the markets over the last couple of days have started to realize that AMC is not profitable. We're not losing $200 million a quarter anymore, or more than that. We actually made $8.5 million last quarter. It's not a lot. It doesn't do much to the bank account, but still, it was a profit nonetheless. AMC is able to support itself right now. And that is something I think the markets are starting to understand. And I think that's why you are getting some hedging and a lot of that buy the dip activity here today. Because again, we're probably not going to get dilution right away. And that was priced into AMC based off that 35% drop. So I do think we can move a little more freely now, especially after the reverse split. We've kind of seen AMC a lot more docile over the past 12 months or so than what we have typically seen before. AMC not really moving all too much, maybe a couple of dollars within a couple of months. It's been pretty slow. I think that does come to a change pretty quickly. So there is that. We will go ahead and talk about all of the data now because I do want to support this stuff up. I don't want to just seem like I'm just talking here. Now let's get into it. Cost to borrow fees, like I said, 1,060% for the cost to borrow max. Cost to borrow average 977%. Interactive Brokers has cost to borrow fees of 879%. Cost to borrow max at 8.6%. Some very extreme numbers here. And if you look, like I said, shorts are not covering. The short interest of free float is 28.33%. This is actually up 0.22%. 146.29 million shares that are currently sold short. Another 327.5 million. 327 and a half thousand shares that are actually being sold short today. Now, if you believe this data, some of this data does work with a lag, right? So some of it's going to come in on a daily basis. Some of this is most likely delayed. So what have we seen recently? Well, AMC stock rallied after that 35% drop, 8.5%. Yesterday rallied 2%, and today is now up 3%. So you've seen green days every single day after that 35% drop. And even if the data is delayed a day or two, like some people believe, or all of this data is delayed a day or two, well, your shorts are adding to their positions. They're not covering. They're not really hedging in the way that you would think. Now, AMC stock is still on the threshold securities list, and we'll look at the FTDs in just 1 second. But I do want to take a look at the option activity, because the option activity is extremely negative, which this just defies counter logic. Why would you be this short in AMC and have this much exposure to options after the 35% drop? And now we're starting to recover. Just the logic doesn't make a lot of sense. That's why I think this stuff is personal. That's why I think maybe these guys got left on a date, stood up at an AMC one back in the day, because this doesn't make any logical sense from someone that's been in the markets for over 5 years now. It's just, that's not the time that you want to be going crazy with the puts. After the 35% drop, that makes your risk reward look terrible. Now, you've seen 50 orders totaling $52.5 million with a positive order value of 0%. Just at the time of recording this video, we're like 3 hours into the trading day, and you're seeing $5 million more going into AMC options today than what you've seen yesterday. And yesterday was a very big day as well, where you've seen $47.27 million worth of option activity in AMC. So today is going to be a colossal day as far as options. And a lot of these options are coming in for even tomorrow, puts for tomorrow and September 15th. Yeah, we're going to get the reverse split. We're going to get, that situation going on. But still, it doesn't make a whole lot of sense. Even look at this trade. A $10 put for tomorrow worth $7.5 million. In August 25th, $10 put worth $8.39 million. Now, why in the world would you spend $7.5 million on a $10 put expiring tomorrow, unless you were trying to hide something? Okay, that's pretty obvious. Look at any other, if you guys have Vortex, it's like $600 a year. Recommend that everyone gets it. Go look at any other stock. Go look at literally anything, and you're not going to see that many trades $7.5+ million, especially expiring tomorrow. You're just not going to see that. Let's go ahead and see. Actually, I do want to let's go ahead and take a look at Tesla, actually, because Tesla is the most actively traded stock as far as options every single day. And let's see if we see anything like that. No, 50,000, 100,000, 300,000, 2025, 300,000. Like, there's $1 million trade right here for December 19th, 2025. No more million. There's a couple $1 million trades. September 15th, you got 275 puts. That's a $10 million trade, so pretty comparable to some of the trades you see with AMC. September 15th, 220 call worth $3 million. And a September 15th 220 put worth $1.82 million. But there are far and few between. There is not a lot of big trades for a stock like Tesla that especially expires tomorrow. That just doesn't happen, okay? And it shouldn't happen with AMC. Hopefully I'm highlighting a problem that you're seeing. Look at Apple. There's $1 million trade in October 20th worth $1.5 million. Nothing. January 2024, $1.6 million trade. $1.1 million trade for 2025. A $6.38 million trade for October 20th. You guys get the gist here, right? You're not seeing one of these big option trades expiring tomorrow, and the ones that you do see expiring tomorrow on something like an Apple are $90,000, $128,000, which, depending on the size of the hedge fund, is pennies anyways, right? So you really don't see a lot of this option activity literally on any other stock. besides AMC. They're trying to hide something. They're trying to manipulate something. That's just the bottom line to it. Bottom line to it. Let me know down below in the comment section what you guys think about this, what they're trying to hide, and what this could mean for AMC. I'm obviously very bullish on what this could mean in the medium term. Now, I'm not saying tomorrow is going to be the MOS or anything, but in the medium term, this can only last for so long. So when it does stop, just even if it stops, that's going to be massively bullish for AMC, because what you're seeing right now is a lot of FTDs. You're seeing a lot of this illegal activity, a lot of artificial dilution and negative pressure on the stock. And again, when it does stop, that's going to be very, very good. Now, AMC does have a short score of 93, $547.3 million worth of short positions in AMC. Weird disparity still with the free float odd and loan and the estimated short interest of free float. Short interest of free float at 28.27%, free float odd and loan at 40.68%, a gap of about 12% here. Huge gap. Shares odd and loan 210.02 million, days to cover 7.5, trailing 3-month cost of borrow fees 304%, utilization at 84.03%. So some very extreme numbers, most certainly, that you are seeing over here as well. So let's take a look at the failure to deliver numbers. Today is August 17th. That means you have failure to delivers of 12.7 million. Tomorrow, you're going to have failure to delivers of about 11 million, and then it drops to 10 million next Monday, and then it ramps back up to a high of about 12.1 million by that Friday, and then by the next Monday, you start at 11.5 million and start to fall. You've actually seen the FTDs increase recently after this reverse split, or the judge made her announcement or her ruling. The FTDs did spike again, so we'll see how those do play out over the next couple of weeks. AMC still on the threshold securities list, so you're still seeing, I believe it's 0.5% of the float in FTDs, or over 1.5 million failure to delivers for 15 consecutive days, something around that ballpark, right? So you're still seeing that actually happening currently. Now, if you take a look at the Stonko tracker data, you have a lot of option activity for this week, a lot of puts in the money. So I would not count out the possibility that the stock does see a sharp reversal towards the end of this week, especially if you can get above that $4 level. Now, good news is AMC stock is currently at $3.93, up 4.5% here on the day. If we have another strong day tomorrow, or end the day off strong today, and you do break out above 4, that's going to be very, very good. Let's take a look at some of the option activity that we do have right at $4, because I think it's could get quite interesting. So what we have as far as the puts for the $4 strike is 207,500. So hedge funds, institutions, they're obviously going to do what they can to try to keep these puts from actually expiring out the money for obvious reasons. But if this many puts goes out the money, I mean, tomorrow could be a very interesting day. So we'll have to wait and see. Tomorrow could actually be a huge day if AMC can break above $4 today, or buy early trading tomorrow, guys. So that is going to go ahead and do it for this video. We have a lot more to talk about in the next video, so stay tuned for that one. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.